Hello, friends. Recent Russia-Ukraine developments? Why not just infer from PBOC latest report? Will Chinese tech earnings impact more compared to this PBOC report, or will this Russia developments impact the equities more? Well, this make or break time for Chinese tech stocks right now with so many variables at play. I have mentioned on 15 Feb 2022 early afternoon Asian time that I'm not expecting anything to happen on 16 Feb 2022 in relation to the Russia-Ukraine matter. I'm not a geopolitical expert, but it's so clear that if someone openly states such matters so obviously to the whole world, one is unlikely to do it even if they want to do it. But because this matters pertains to Russia's national security as well as US military deployment into this region and Ukraine NATO's relations, it's not an easy call to assess what is going to happen. Not being a geopolitical expert doesn't matter. Being an expert in price points, I can observe that Nasdaq 100 has held above 14,400 points on 15th Feb. But volatility is not going to disappear. Downward pressure may emerge anytime, so it's good and important to choose good stocks. On 15th Feb, we observed that Nasdaq 100 went up 2.5% to close at 14,620. Right now, a big condition is that for me to be cautiously optimistic with good tech stocks is that Nasdaq 100 has to hold above 14,400 points this week. These are updated view on 16 Feb 2022. But why does it matter to be talking about US, Russia, Ukraine, US equities market in general when we are dealing with Chinese tech stocks? Here is why. Chinese tech stocks like Alibaba, JD, Tiger Brokers, Futu, Pinduoduo, etc. are all listed in US. The good thing right now is I edge towards the side that inflation in US may have peaked. Note that I'm not an economist. I noticed that US new coronavirus cases are down from record high. You see here? So I might just be right on my inflation call that inflation may have peaked. With the US equities markets assessment done, so what did I infer from PBOC latest report issued in Feb 2022? In that report, PBOC recognized that there's still some weakness in domestic demand. Action taken so far is that there's lower key rates in January 2022. They also maintain higher liquidity in Feb, which was announced yesterday, though one of the key rates is kept unchanged right now. In the PBOC report, they continue to emphasize on stability and maintain that PBOC will not flood the markets with excessive liquidity. Property is also being mentioned. That is that property is meant for people to stay and not to speculate. Actions taken so far is that, like what I mentioned, one key rates remain unchanged in Fed, and inflation is still high but it's lower than expectation, which was just announced. PBOC report also state that they will continue to support small medium enterprises with favorable loans. Note that RMB has strengthened against USD, but reckon that it is manageable. Is it really manageable? I have to continue to monitor the situation. I have observed that there's lower tax rate being extended to small medium enterprises in China. It's important to note that PBOC and China will continue to deepen financial markets reform and at the same time strengthen the reforms to restrict excessive capital and ensure proper risk management framework. You will continue emphasizing on the need to cultivate a wide and diversified group of qualified investors. This is a very interesting piece of statement. So what has actually happened? I've seen news release from state media saying that there should not be unrestricted capital expansion. More regulations has already been recommended. In summary, I think China is still concerned over slowing domestic consumption as well as the general interest rate environment. But I do think that China is still not keen to flood its economy with excessive liquidity as seen from Fed 2022 decision. So what should we do right now? We actually see that China is adopting a wait and see attitude into March 2022 to coincide with Federal Reserve rate hike decision. I will also want to see if there are other fiscal expansion measures like infrastructure spending, etc., to support China's domestic economy. If that happens, this will be very favorable to invest in Chinese tech stocks and Chinese stocks in general. But let's wait and see. Beside US and PBOC report, what about the earnings of Chinese big tech? Expectations of Alibaba seems quite high, but I have not dug into the financials of Alibaba in details. So we have to wait and see on what's going to happen on 24th Feb when Alibaba released its results. Not so much is expected from Tencent though. Sounds positive to me. Why? Well, lower expectation, and it's easier to beat low expectation, isn't it? But it's weird to see that Pinduoduo is expected to do well, though its share price had tanked almost 50% at its 52 weeks low in January 2022. It has since recovered by around 30% since its 52 weeks low. Meituan wasn't expected to perform too much for its 4Q 2021 results. Same for Xiaomi, as you see that the expectation goes lower and lower, and 4Q 2021 results was definitely expected to be very weak based on what analysts has called for Xiaomi earning expectations. Alibaba 4Q 2021 results on 24th Feb 2022 will kickstart the results expectations of the Chinese big tech. I wonder why the expectation is set so high, like what I mentioned earlier. And this made me wonder if Double 11 sales and other corresponding sales will ever disappoint on 24th Feb. I would not buy Alibaba and Tencent right now at such price point. And in fact, I would rather wait and reassess Alibaba results on 24th Feb before I make any call to buy or to hold or not even consider a position in Alibaba and Tencent. Tiger Brokers has actually shown strength despite recent statement by a PBOC official. See my earlier YouTube video if you are interested. As for Futu, it has shown stability since the news. This may be a time for Tiger Brokers price to catch up with Futu, since Tiger Brokers has in fact tanked a lot more compared to Futu. To sum it out, I will not be in a rush to add any Chinese big tech as Alibaba results may sway sentiment. But for companies like Tiger Brokers, which I already have positioned, I will keep my positions and add again in small volume. Viewers should nevertheless note that the Chinese regulations over overseas investment is still unclear. As for Xiaomi, there isn't a big rush to acquire Xiaomi, and it will best be only considering it again after Alibaba results, because I think that it may sway the sentiments for Chinese tech stocks. As always, this should not be construed as any investment or trading advice. Thank you.